on the S&P. We hit it earlier this week and couldn't hold it.
Couldn't hold it, didn't quite get there. Maybe next week when we get even more earnings. And of course, we got a big pre-announcement this week from Discover Financial that shocked some analysts after the credit card company warned that investors may write off those rates, those write-off rates. They could double this year. Now, this news comes ahead of quarterly results from the likes of Visa, MasterCard, and American Express. Let's then dig into some of that with Diksha Gira of Bloomberg Intelligence. And again, we got the pre-announcement from Discover Financial this week. Does that have any implications for some of the credit card companies that are reporting in the week ahead?
Yeah, I mean, specifically if you talk about the card networks, which includes Visa and MasterCard, I think I wouldn't really worry too much about credit with regards to them because they're not underwriters of risk. On the contrary, I would actually expect Visa and MasterCard to have a very spectacular quarter that ended in December. Spending trend in the U.S., particularly looking at the spend trend data, look quite healthy. And they have a couple of tailwinds coming along from the digitization of cash. We're seeing Asia open up, so cross-border is a very big element for these companies. So there is some momentum going on in there that should support flows. But to your point that you just mentioned, I think we could watch for recessionary guidance, because until now, we've seen very healthy numbers and we've not seen these companies kind of bat an eyelid with regards to where the economy could be headed. So that's the commentary I'll watch out for.
Talk to us, Diksha, a little bit about, I guess, the differences in the types of consumer that each one of these companies have. I remember during the last earnings cycle, we were talking to the executives over at American Express who overall deal with a much wealthier type of customer, and they really weren't seeing any problems. But then you talk to some other folks who were lower on that credit spectrum, credit quality spectrum in terms of the consumer, and they were seeing still high volumes of spending, but certainly a shift in what people were spending on.
Yeah, I think that's a very interesting point you raised. So obviously Visa, MasterCard are a lot more widespread across the spectrum compared to American Express, but you'll still see a significant portion of the volume that comes out is the affluent class is kind of the bigger ticket item in that. So, but also don't forget, Visa is dominant in the US, but US is not the only market for Visa, for example. So we've been seeing a lot of opening up and travel opening up in Asia, and that's been a good tailwind for these companies, especially because cross-border business is higher margin. It's more lucrative for these companies, and they've been doing a lot to kind of gain more flows from different variants, like they're going after the B2B flows, the G2B flows. So there are a lot of other alternative flows that they're going after.
So if we broaden this conversation out to payment companies more broadly, when I think back to 2022, 2021, a lot of numbers there. One of the trends I heard a lot about was buy now, pay later. Haven't heard a lot about that yet, but it is only January 20th. But where do we stand on that phenomenon right now?
Yeah, that's a very interesting point. And just taking a cue from Discover's trends, it's important to watch that sector a lot more closely. Credit cards obviously is a very broad, widespread sort of credit risk, but we've seen the relatively weaker segment may have more exposure to the buy now, pay later segment. So that's the area that we really need to watch closely on credit risk. Some of the companies that we look at, Afterpay, Affirm, I think they've reported relatively healthy trends until the September quarter, but I think that's what we need to watch out for within the buy now, pay later, and especially as interest rates have risen. So either they're tightening their credit standards or they're going to see write-offs, which both of them are something that is bad for financial performance.
Talk to us about the fee structure of some of these companies right now and whether that's still intact, particularly with some of the, I think, the big gains in growth that we had seen in the previous quarters.
Yeah, I think the fee element, they're very innovative with regards to the revenue line items that come along. And that's something that has kind of kept these companies going despite a relatively adverse credit environment. We could see more product rollouts. They actually help merchants at point of sale conversion. They could do a lot more targeted marketing for these merchants. So all of these could be revenue drivers. There's a lot of focus on financial wellness, and a lot of BNPL apps claim to allow users to have a better control over their financial lives. So all of these could be future revenue lines supporting some of these companies, and that's what's going to be the most important part in 2023.
Diksha, it's great to get some time with you. That is Diksha Gira of Bloomberg Intelligence. Now, keeping you up to date with news from around the world, here's the first word.